Super microcomputer stock has been on fire, and not the kind of fire that you'd like to see, with the stock being down by nearly 30% in the last 5 days. However, the company has had very impressive revenue growth at about 110% within the last year. So the question becomes, what in the world is going on with super microcomputer stock? After performing tons of research to figure out the different factors that are affecting the stock price, I'm gonna share with you whether this is a good opportunity to buy the dip and really profit from this investment, or if you should drop this stock altogether. As I perform my research on this particular stock, I must say there's a couple of things that I really like about this particular stock, and one of those things is the market that the company serves. So for those of you who don't know, they serve the data center market. More specifically, they have a whole bunch of solutions for the rack space that are needed for the different data centers. And what is good about this market is that you can see it has some very good projected growth, and there's a lot of really positive trends that may even be underestimating the size of the market that these different reports provide. And that is because these solutions are incredibly helpful when it comes to the development of like new AI models, the development of 5G and Internet of Things infrastructure, and the development or just overall data centers, regardless of whatever computing use you like to have. And the company is well positioned to take advantage of these trends, and that's what the company has been doing really well so far. Which takes me to my second point, and that is the fact that the company in recent years has had absolutely phenomenal growth. So you can see the income statement in this case, and you can see the growth of the revenues. And this has been absolutely fantastic. There's many different reasons why the company has been able to grow. One of them is its technology and its partnerships with the top chip technology companies like AMD and Nvidia, and this is just very positive, and one of the reasons why the stock was so hot before a whole bunch of things that we're going to talk about in the video happened. Now, the other thing that I really like about this particular stock is the company's products. So after reading a whole bunch of reviews and a whole bunch of comments about the company, what is usually being said about the company is that the company is really well positioned. Obviously, there's some strong competitors like Dell, as it is mentioned right here. There's HPE as well. But as you can see, the comments are quite positive, saying how the company's products and services really do match up well with the existing solutions out there. In some cases, they're superior. And what I really like is the fact that what they say is that they may not have the best service out there, which is something that the company can definitely improve upon. But what they do have is a product that is reliable. And if you're looking for a solution that is not going to give you a lot of problems, they are a great solution to go for in the marketplace. So the stock has a great market, it has a great product, and it's growing its revenues very, very quickly. So what in the world is going on? Well, there's a whole bunch of issues that we're gonna go one by one. One of the main issues is, first, the company seems to have some strong conflicts of interest, and as you can see right now, some of the top management team is involved in the family, and they also own other companies that are suppliers in the space. So this creates a conflict of interest that is something worth mentioning. Now, the CEO seems like a very competent person, somebody that really understands the industry really well. But at the same time, the problem seems to be that the company has had a history of reporting accounting issues. So what happened now recently is that EY, the company's accounting firm, resigned, and the reason why is because they had many concerns about the company's accounting policies. So this is not a good sign, and this could mean that there were many different numbers that may have been exaggerated, and the company's done this before as well. It wasn't like this is the first time. So the company resigned, and now everybody's wondering like what they did wrong, and this is causing some issues where like the company could literally get delisted from the stock market because of not being able to comply with the filing regulations, where companies need to report their financials every so often. So there you go. You can see the exact statements of the accounting firm right here. We're resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on the management's and audit committee's representations. And he concluded that we can no longer provide the audit services in accordance with applicable law or professional obligations. So there's a strong chance that the company somehow broke the law, and this is why the company resigned. Now they're struggling to find a new accounting firm, which is causing all kinds of issues. And then the company just had a new report where they issued lower guidance, meaning they're expecting lower revenue and lower income than anticipated because of this different problems that the company is now facing. And then some other suppliers like Nvidia and AMD are shutting down their relationships because they don't want to be involved with a company that has a scandal of this type. Now, one of the problems which really gives credibility to the possibility that the company manipulated their financial results is the fact that the company's compensation plan, as you can see right here, it's really based on two different objectives. We have the revenue goals and the stock price goals. So revenue, it seems to be the main metric that could be manipulated based on the company's financial statements and what EY reported. And then revenue obviously has a big impact on the stock price. So therefore, this really makes it a lot more credible and a lot more possible that the company did manipulate these numbers in order to increase the compensation and the bonuses for the different members of the executive team. Now, when it comes to the company's financial performance, I see a lot of really good things. Like I said, the revenue growth being probably the main one, but there's also some things to watch out for. So I got the financial data from Whitesheets. You can just type the name of the stock, click right here, and then select annual data, and you're going to be able to see all of the financial metrics, key metrics, cash flow. You can see here balance sheet, income statement, etc. And the data goes back a long way. Now, in this case, what I saw that's a little bit concerning is first, the margins are quite low. One of the explanations given by the CEO is the fact that they've sacrificed their margins to grow as fast as possible, which does kind of make sense, but still, in this market, it seems to be very competitive. I mean, the margins might improve a little bit, but I don't think long-term you're gonna be able to all of a sudden see some huge swing where now you're generating, instead of like 14% margins, now it's like 75% or something like that. You'll just never see it in this particular space. You can see the operating income ratio is also very low, and then the net income ratio is also low as well, so just something to keep in mind there. The other thing is that there's been share dilution over time that the company is using to fund new factories, so something to watch out there as well. And then lastly, one of the concerns is that the company's cash flow is all over the place, which the ideal thing to see here is just free cash flow just growing over time as the company continues to grow and continue to generate this growth at a profitable rate. Now, the last thing to talk about is the company's valuation. So just performing very quick valuation of the company. If the company grows just the market rate, which right now they're growing much faster than this, so you could even say like 20% or higher, but let's just say that they're growing at the market rate, price to sales ratio of 1.5, which is also very reasonable for this particular industry. We, in a 15% discount rate, we get a price per share of $27.96. Currently, the stock price is trading for, currently, if I use this formula right here, which comes from Whitesheets, it's gonna give me this information that I've selected right here in real time. And as you can see right now, the price has changed to 21.40, which represents an upside or downside percentage of 31%. So this is extremely positive. And as you can see on the sensitivity table, there's all these different scenarios where the company could do really well. However, the main thing to keep in mind is that the fact that it's very possible that the company may get sued for lying and for lacking in integrity and engaging in different business practices that are not ethical. And therefore, this is gonna really affect the performance of the future, the brand, the reputation, etc., which then would decrease the revenue growth and then also the terminal price to sales ratio as well. So we don't know what is going to happen with this company. Right now, it seems like it's trading at a pretty attractive price. However, keep in mind the stock may also get delisted. If that happens, that's going to be really bad if you invest in this particular stock. So my advice is wait for more information to come on, and so that we can see what exactly happened with the accounting practices, what is happening with the conflict of interest. After that, you can then buy right away, because if things are positive, what's going to happen is that the revenue growth is going to continue, assuming that there's no major adjustments, and then the stock is just going to take off like crazy, because as you can see right now, it's really undervalued as it is, but it's only undervalued assuming that everything goes right. So I wouldn't want to take the risk personally if I was looking at this investment at this particular time, because you can just wait until later where the risk becomes lower and the reward, it's not going to be as high as if you invest right now, but it's also going to be very high nonetheless. So that would be the strategy that I recommend. However, like always, make sure to do your own research. And if you've enjoyed this video, make sure to also subscribe to the channel, and I'll see you in the next one.